Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 10th of May here in 2022. And we have a big news report taking place tomorrow, an economic report. It is the CPI. But before we get there, let's take a broad look at the daily and weekly charts of the S&P. Starting with that, we still have our 4,200 here, and on the daily chart, about 4,100 for spike reversals. We are in the potential drop zone. So the market is looking over the edge of the cliff. It is peaked over the edge of the cliff, maybe putting a foot down to the edge of the cliff, and could fall through the edge of the cliff. That's what we're watching on the big perspective and the big picture. That would be a slide for share prices well beyond, and that's why we look at the weekly chart, because we don't see the perspective and how prior targets are in play just on the daily chart. We need to expand that to the weekly perspective. So for the S&P, that continues to be a drop zone or a sell side continuation of the downtrend as long as the index finds its way beneath 4,100 and lower. So that will set the stage for tomorrow's session, which has the CPI. So we'll look at the market watch right there. Take everything off the focus here and look at this. We'll actually get the earnings off and look right at the CPI. That is Wednesday's session. That'll be the big report. We had the Fed last Wednesday. We had the jobs report last Friday. Now we're going to have the CPI, that is a consumer price index, and that will take place Wednesday morning pre-market. So let's get started there. From that, on the CPI, that's our list. That's what the play will be. So what values might the market be looking for? Previously 8.5, a little bit above expectations. That's the big engine driving the economy, or at least the big focal point. How high is inflation? Is inflation cooling, or is inflation still heating up? And of course, that'll put in motion what the Fed does in future Fed meetings. So if we do come in higher than 8.5, and we can, of course, look individually at what the components of the CPI, the Consumer Price Index, but also we'll have in tomorrow's session as well, the Consumer Price Index and the Core Consumer Price Index, both taking place Pacific time, 8:30 in the morning, pre-market. That's the focal point. We also have earnings, and taking that off the table, pinpointing a couple of earnings here as we go into Wednesday. 120 stocks generally are going to report before the market opens, and 159 will report after the market closes. But let's pinpoint a few stocks, one in particular. It is Walt Disney, Disney, DIS. That will report earnings after the bell on Wednesday. Where is Disney shares downtrending? Lower lows, lower highs, lower lows, lower highs, forming and continuing a persistent downtrend on the daily chart. And we want to stay to the short side if at all possible with positions, put positions, and put spreads. But that weekly chart, just like other technology names, and Disney is a conglomerate, part of technology, but we think of it as a retail company mostly, has fallen from 200 per share all the way down toward this almost at 100. And I like to assess things based on COVID lows and where the market was before, during, and after that pandemic. And that's the start of 2020, before the Fed was aggressive with their policies, and of course the stimulus and the stimulus checks and everything else took place in the world that created, or at least helped fuel inflationary trends. And now we are reversing those. Disney is one of the companies that has suffered a large decline, roughly 50%. Of course, we love to talk about Netflix, which is just a stellar decline from 700 down to under 200, and it as well has continued its downtrend in motion. Trends, generally speaking, do have better odds to continue when they get moving. Just like a momentum takes over or sell side activity takes over, share prices continue to tumble when a downtrend has been triggered, and that does tend to happen. So that's, again, things we're looking on the S&P. We looked at prior events to where we might get clues. So that, again, looking at the chart here, it would seem very difficult to understand, or at least to project how far that can go But it does help to look at stocks such as Netflix and Facebook to get a sense that yes, the market can actually continue sliding into lower lows. And that'll come through on the NASDAQ being a technology-centric index. There's the daily chart. Now, it is in a bear market as defined from a high to low, or from the prior high. The market has fallen greater than 20% to the downside. Again, individual stocks in the NASDAQ, many of them are seeing declines at 20%, greater than, and some well beyond 50%. That will also play in the XLK. The XLK is the broader technology index for the ETF. That is down about 23%. But in today's session, let's go back to the Visualize tab. We'll go to the heat map and we'll see that the strongest names in today's session, generally speaking, were the tech names. Tech names including Microsoft, Apple, Nvidia, Adobe, and then we get over here to Google, Facebook, and then these are actually what we consider retail names, Amazon and Tesla. Amazon was down again in today's session. Speaking of down in today's session, let's take a quick scan at which stocks in the S&P 500 pushed down to new 52-week lows. And that is the first one that is there. I sort these scans here in Thinkorswim by market cap. So Amazon having at the moment, which sounds strange to say, but at the moment, a 1.1 trillion market cap share. And it is the number one stock that is pushing off to those lows. Behind that, JP Morgan, Home Depot, Bank of America, and there's Walt Disney World, Adobe, Danaher, Nike, Morgan Stanley. So we're seeing retail names and financial names take the hit, or at least take the brunt of the sell side activity. Again, just looking at a scan, and we'll put them all up, just a few of the names here, of stocks making 52-week lows. There is Amazon, just to go down the list by market cap, daily chart on the left, and then weekly chart on the right. Behind that would be JP Morgan, that's financial. Home Depot is a retail, making new, and that's what the scan does. It just shows any particular stock in the S&P 500 making a new 52-week low, and that continues the downtrend. Bank of America. We could also consider these stocks to be on the leading edge of the downside in the broader market. Disney again will have earnings after the bell tomorrow. Adobe, little sell side activity and bear type flags, bear type trades. Danaher. And there's Nike, which has broken its trend and continues making new lows. Morgan Stanley, Goldman Sachs, Citigroup. There's PayPal, which just made a new low in another bear flag to the downside. And Starbucks. Well, I should keep going. Starbucks, General Electric, Netflix, and Boeing are all companies, just to name some of the ones in the big market cap. And there's actually 110, so we'll highlight that fact. 110 stocks in the S&P 500 went to new 52-week lows. Bear market type activity. Was there any stocks that shone to the upside? There were a couple. And they're defensive names. General Mills, GIS. Relatively small market cap, but still in the S&P 500. That actually made new 52-week highs. General Mills and Kellogg's. Even if we are in or going into a recession, even with inflation, and even whatever the conditions of the economy are, we still have to eat. And these products that are considered consumer staples, just to name a few, Kellogg's and General Mills, they are trending to the upside and pushing new 52-week highs and getting relative strength. So while the bulk of stocks, 110, just to name today's session, are making new 52-week lows, that's a very, very low, a very high breadth number to the downside. Two of them are making new highs, and they are defensive. And that's not necessarily something we would look to see in a grand bull market. Defensive stocks, think about them like bonds. Again, in the worst recession, you still have to eat, drink products such as Coke and Pepsi and the like, if you wish. And of course, those are conglomerate brands that have other products beyond just soft drinks. And of course, General Mills, we may think of it as a cereal company, or a breakfast company, but it has plenty of products well outside of that realm. Still have to eat, still have to drink, and the like. So having these stocks be the leadership in the stock market, not necessarily a very bullish sign. So we will be on guard for any particular major sell swings or major volatility that can come into the market once again from that CPI and the inflation data. One final note, we mentioned these a few moments ago. Not this week, but week after, we will have Home Depot, Walmart, Target, and Lowe's. They will report earnings next week. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for May the 10th, 2022.